So it's not just a rally in tech. We're seeing a rally overall in the momentum-driven stocks, and I think this is likely to continue. We still have concerns regarding what these tariffs are going to mean, what the impact is going to be for growth. So really where people are putting their money right now is they're putting their money in the stocks that have worked, that they think are going to continue to work, that are delivering upside in terms of earnings growth. That's where people want to be invested, and I think that's going to continue. So you're likely to see a little bit of a tapering off as the market starts to digest some of this incoming information over the next few days with respect to tariffs. But I think on an outperformance basis, tech is still the place to be.
All right. So, Doc, we're obviously paying attention to what's happening with the market today and the impact from more of this, trade war stuff, if you want to, if we want to call it that. But we're trying to take a bigger picture look as well. What the implication is from some of this tech stuff. Facebook, best week since June 1st. Amazon, 9th positive week in 10. Netflix, all-time high. That stock has been just incredible. Alphabet's best week since June 1st. The Q's 4 weeks in a row.
Who's not having a great day is Apple.
Apple.
Yeah, exactly.
Well, it's the
$2 dip here today, a little bit more maybe.
What does tech's rip mean?
Well, I was watching, for instance, Dropbox, Judge. Now, this one just came public, of course, just a little bit ago. And all of a sudden, just this week, it rips like 24% or something. I mean, as soon as it broke out of those old highs, they weren't very old because it just got listed, like I say, but still, the volume's there. It's not just a story about 30% short interest like we cite on some of the stocks. This one doesn't have that, of course.
Yeah, these squeezes that have been taking places across some of these technology names that we'll get into those.
Right, but overall, I think technology, just as Aaron said, is doing extremely well. I don't see a reason that needs to be thrown off the tracks, even by President Trump and these tariffs. NXPI, though, had a nice 8% rip, I think, or something like that in the pre-market, Jim, and most of that vaporized because of the combination of, do they really have regulatory approval over in China, and or do these tariffs coming back on with the $50 billion, does that mean that
if you're going to have a debate on whether you think this rally is going to have a rest or a resurgence, you want to see, Jim, these names leading the way, do you not? I mean, this is what happened before.
You are correct. And just to put a little more flesh to that, I do think we're in a relatively quiet period. I mean, we're leading up to the second quarter earnings season, and we're now entering the pre-announcement season, which is kind of a mini catalyst season. You're actually hoping for no news to come out. And in that sort of quiet period where there's no stock-specific catalyst, you should expect that what has been winning, i.e. FANG and most of technology, will continue to go higher until there's a reason for it to go lower. On the bigger picture, I'm not expecting that over the next 2-3 weeks, any of the big picture issues, whether it's China, North Korea, the Mueller investigation, get resolved. I'm just not expecting that. So this is still a stock picker's market for the next few weeks. Hate this saying, but I'm going to say it. The trend is your friend. After the next few weeks, assuming a quiet pre-announcement season,
but if you're saying the trend's your friend and the market's going to go up, it's not necessarily such a stock picker's market.
Not in the next 3 weeks. You're exactly right. I just want to finish the sentence, though. When you get into earnings season, this is where I just said, place your bets. That's where, as an active stock picker, that's where you're going to show your mettle, where you're going to say, these are the companies that are going to outperform on their earnings reports relative to where the analyst estimates are. That's where stock picking matters.
So, Josh, Julian Robertson was on the network yesterday with Kelly and Closing Bell and said, quote, I don't think the FANGs or the tech stocks are frothy at all. I think relative to the rest of the market, never have these stocks been this cheap. I listen up when Julian Robertson says things like that, and he's been a big believer in these FANG stocks for a while.
So the businesses are all separate stories in terms of valuation. Like to take Netflix's multiple and say, oh, well, this is very high, so the rest must be high, I think is a mistake. Because Google, based on its earnings growth alone, not only deserves its current multiple, but then you start thinking about some of the parts within Google that are not being valued separately, that if they were broken out and given a comparable multiple, they'd be worth much more. So I do think that those stocks, while we all talk about them together and we use that colloquialism, it's not necessarily the story across all of them. And then what metric do you want to go by? Do you want to go by trailing 12 months earnings? Do you want to go by price to earnings growth? Do you want to look at future earnings? So everyone's got their own lens. I think bigger picture, leadership is still the cues. And then surprisingly, in the last year, you want to be looking at Russell for leadership. So the IWM is the ETF, up about 21% over the last year. S&P is only up about 16. I say only tongue-in-cheek. But then the S&P coming after that.
So why is this bullish? Because you have the leaders leading, and then you have the confirmation from the small caps.
You have a broad rally. And even a day like today, you get the XLE gets slammed down 2%. You get like the industrials come off because of the China tariff fear. But then you look, the VIX is 12.5. The market is fine. The market can endure these types of one-day, two-day tantrums where one sector gets hit on headline news. The market is fine.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.